Everybody, welcome to JAIIB CAIIB English Medium channel. Today in this series of PYQ weekend special, we will be bringing you the principles and practices of banking questions. So as you know that when the week started, we have informed you that we have a special PDF for all of you from where you can gauge the level of preparation of yours because this PDF belongs to previous year questions only. And how you will be able to download it, that also we have covered in a separate session. But today also I'll be telling you that from where you have the access of the this particular PDF in case you have missed that particular class. So let's get started. First of all, let's try to solve some questions based on the PYQs and then we'll be moving towards that how we can download the PDF. So first question here, what is the goal of FATCA, that is Foreign Account Tax Compliance Act, and how does it work to prevent US persons from evading the taxes on income earned from their assets held outside the United States? So a very important question, a very practical question I would say, because everybody knows what is the goal of FATCA, but how it actually prevents some activity to happen, some you can say illegal activity to happen, and in this case the illegal activity will be evading the taxes. So what will be the correct answer here? To encourage the global financial transparency and prevent the tax evasion, to require the financial institutions to perform enhanced due diligence on US accounts only, then we have to ensure regular reporting of US accounts to US Internal Revenue Service, the IRS service of US, or the relevant government authority to assist in identifying US accounts held in foreign banks and the financial institutions. So, what will be the correct answer here? Definitely, the correct answer will be to encourage the global financial transparency and prevent the tax evasion. Right. So, this is the only purpose, the primary motive of your Foreign Account Tax Compliance Act, that we have to encourage the financial transparency and prevent the tax evasion. Here also in the explanation part, you can see that FATCA was enacted to increase the international financial transparency. Main aim is to discourage the US taxpayers from using the foreign financial institutions to hide the assets and avoid paying taxes on income earned from those assets. It mandates that foreign financial institutions report US account holders' asset and income to the US government directly. And this reporting mechanism, it helps the US government to detect and prevent the evasion by ensuring that income from foreign holding is subject to US tax obligation. Okay, so this is a very important act, as you know, but always remember what all acts you are learning, whether in PPB or for our IFS also the same thing holds, that you always remember what is the primary objective. Next question, what are the key documents required to open partnership firm's account? So very simple question I would say, because partnership firm account does not have many documents. So quickly tell me what will be the correct answer. You need to have the current account opening form, specimen signature cards, or partnership letter, or all of these. What will be the right answer here? The current account opening form you have to take, fine, because in partnership firm we open the current account, then SS card, the specimen signature card is taken, and along with that the partnership letter or the deed which we call. So correct answer will be option A, that is 1, 2 and 3. Here, to open a partnership firm account, several documents are required. These include current account opening form, then SS card, partnership letter. Additionally, partnership deed is crucial for verification, as it outlines the business nature, the partner's detail, the operational guidelines for managing the account. Together, these documents help to ensure the proper setup and verification of the partnership account. Okay, so whether the statement states partnership letter or for that matter partnership deed, both are required while opening an account. Next question, which category of accounts does not need to be transferred to inoperative account status even if they remain dormant? So always remember that the question which pertains to the dormant accounts or for that matter inoperative account or deaf account, they are important because in the past quarter of this particular financial, RBI has provided good amount of updates for such kind of accounts. So you have to tell me that which does not need to be transferred. First, type of account, the account where operations have been stopped under garnish order or any court order, that you have some dispute with a party Y and they have to pay you back, but they are not paying you back. You approach the court and the court puts an order in front of the Y's bank, and the account is now freezed by the Y's bank. Accounts where the nature of the account itself permits only periodical and not regular operation. And there might be certain type of account where only periodical, you can say, transactions can happen, but not the regular operations are allowed. Accounts where the account is under lien or charge for advances allowed to the same customer in the another account. So this is also one of the important type where you find that there is one account which is already under lien or certain charge for the advances for the loan account which he or she is holding to the same customer in the another account. So if whether you can transfer such kind of account into the category of inoperative account status or not. Accounts that show a debit balance, that is also important, because the debit balance will be shown by either the overdrawn or for that matter OD, overdraft account. So what will be the correct answer here? The accounts that does not need to be transferred in inoperative account will be all of the above. You need not to transfer them in the category of inoperative account. Inoperative account simply means that for the past 3 months you have not transacted any kind of funds from this account. Next, what is the primary reason for using a combination of grayscale and black in the CTS, check truncation system, for the check images in our country? So you must be knowing that right now we have the talks ongoing around the financial market that from 4th October, RBI will be introducing the first phase of continuous check clearing system. But right now, we have, as of September, or you can say till 3rd October, we have the check truncation system only. And there you should have seen that there's a combination of grayscale and black whenever we talk about the clearing of these checks. The scanning is done using the grayscale and black. What is the primary reason? To enhance the image clarity and readability, to improve the security features and prevent the fraud, to reduce the file size and optimize the storage capacity, or to ensure compatibility with scanning and processing technologies. So when we talk about image clarity and readability, do you think so that it is the primary reason? Because you have been asked the primary reason. Reasons can be a number of reasons, but what is the primary reason? Image clarity. Why do we want image clarity when we have the physical check in our hand only? Security feature, prevent fraud. Yes, this can be one of the primary reason. To reduce the file size, no, we already have the check with us. We do not need to store it as such. Fine. The primary reason is not to store the check in the electronic form. To ensure the compatibility with scanning and processing technologies. This also can be one of the reason, because the scanner which scans these images, it has certain configuration to be met. But what is the exact primary reason? Definitely it will be option B. We want to have improved security features as well as we want to prevent the fraud. One more additional question for all of you, which you should tell me in the comment section. And when I talk about this grayscale and black images, what is the purpose of your grayscale images? Whether the front as well as the back end of the check will be provided via the grayscale image, or for that matter, front and back end of the particular check is provided via the black image. What will be the correct answer? I hope that you know that your check has front, right? One front is there where you have the payment amount in words, in digits. Then here is the date. The beneficiary's name is here. Then another is your back. So you need to tell me that whether this front has your grayscale and black images, or for that matter, only one of these are there. And what about the back? Whether we have the grayscale and back images under the CTS or not. do reply in the comment section. Fine. The primary reason for using the combination of grayscale and black in the CTS for checks images in India is to provide security features and prevent the fraud. This combination helps in capturing intricate details and preventing the tampering or, for that matter, unauthorized alterations in the check image. Next, we have what is set off in context of bank customer relationship and how does it work. See, such kind of simple questions have been asked in the PPB exam. Okay, in the last exam, May 2025, we have seen that a good amount of questions from numericals were also asked, 15-20%. But when you talk about the theory, it is limited, right? So if you know the basics, then you can directly solve such questions, no matter how lengthy the statements are. So set of Rosso, as we call it in the banking parlance. So you have to tell me how it works exactly. So set off refers to customer's right to offset a debt owed to them by the bank when paying off own debt to the bank. Carefully try to understand what is written here. Set off refers to a customer's right, whether it's the right of customer, the right of set off, the right lies with the customer or, for that matter, with the bank. Set off with the process of adjusting the debit balance in the one account with credit balance in the another account. You already have one account where there is some negative balance, debit balance is there, and you transfer the funds from the credit balance, whether that is the meaning of the set off. Set off allows the bank to deduct its claim from the amount payable to the customer. So deduct its claim from the amount payable to the customer. Whether bank can deduct certain amount which is to be payable to the customer or not. That is known as set off. Set off involves the creditor debtor and debtor creditor relationship between bank and customer. So creditor debtor means what? A particular bank is a creditor when you are providing some debt or loan to the customer, when the bank is providing loan to the customer, and the bank becomes a debtor for the deposits of your customer. Okay, so what will the correct answer here? Right of set off is extremely important for us under this creditor debtor or debtor creditor relationship only, because in this loan uh, account you will find certain intricacies whenever there are multiple loans involved for a particular customer. So you have the right of appropriation as well as right of set off directly with the bank. So banks enjoy this right, not the customer. Okay, always remember this. Next, what is the purpose of NRE, that is non-resident external rupee account scheme in India for NRIs as well as PIOs? So I hope that since the exam is approaching, you must be knowing the difference between the NRE, NRO, FCNR. All these are important for our examination. And if you have not seen our videos based on this particular difference only, I would highly recommend to watch the video under the section of Hero to Superhero series. There we have discussed at length the difference between these three accounts. So what is the purpose of NRE account? To facilitate the management of foreign exchange sources, to meet the specific needs of the NRI or persons with Indian origin diaspora, to promote financial inclusion for NRI and PIOs, or for that matter, encourage the investment in India's domestic market. So external means what? Here NRE, external means what? That you are not having the funds in the rupee denomination. Ordinary means what? Currency is in the form of rupees only. FCNR, again, foreign currencies are involved. So for this question, the purpose of NRE account is simple. That is to facilitate the management of foreign exchange resources. A will be the right answer here. Next, why have FEMA regulations been modified to allow the residents in India to maintain accounts denominated in foreign currency? Why is it happening? Okay, why we have modified the Foreign Exchange Management Act regulation to allow the residents in India to maintain the accounts which are denominated in foreign currency? Why? Why in foreign currency? Why not in some other, or you can say, local currency? To encourage the capital account convertibility and facilitate international transaction. So if you are converting the amount of, let's suppose, euro, fine, you have the euro with you and you want to convert it into the equivalent rupee. So whether FEMA regulations will help or not, or they have been modified for this purpose only, to provide a natural hedge against exchange rate risks and save on the bank conversion charges. Yes, this is the most apt explanation out of these two. But let's see the third option also. To restrict the use of foreign currency for residents in India, promote the domestic currency stability. So how you will ensure that your domestic currency, the Indian currency, the rupee, is stable by comparing it with the other foreign currencies, not under the FEMA regulation. So this is not correct. This is again incorrect. To regulate the flow of foreign currency and prevent the capital flight from the country. So capital flight, mostly it happens not in the currency form, but by the foreign institutional investors in the secondary or security markets. So this is also incorrect. The most apt explanation of the reason why FEMA regulations have been modified to allow residents in India to maintain accounts denominated in foreign currency will be to provide a natural hedge against the exchange rate risk and save on the bank conversion charges. B will be the right answer here. Next question, which type of complaint will not be covered by the ombudsman in case of deficiency in service? So always remember the RBI ombudsman scheme is very important. RBI's integrated ombudsman scheme is the most important scheme in your PPB examination. So you have to read it in and out. All those aspects, all those parameters, characteristics which are there in the scheme, you must have good knowledge of them. So, which of the following are not covered by the ombudsman in case of the deficiency in service? Complaint regarding the commercial judgment, commercial decision of a regulated entity. So, commercial judgment, commercial decision means what? Which is not pertaining to certain individual. It is applicable for the entire gambit of your services. Dispute between a vendor and regulated entity in outsourcing contract, whether you can approach the ombudsman or not. When there is a dispute between the vendor and the regulated entity, grievance that is directly addressed to the ombudsman, or for that matter journal grievances against management or executives of a regulated entity. So always remember, ombudsman scheme was there to provide better service quality to the customers. Fine. So will not be covered is option B. That is, this is not covered. The first one, commercial judgment, commercial decision, not covered. Then we have the dispute between vendor regulated entity, again not covered, and grievances against management executive of the regulated entity, not covered. You can only have the grievances addressed that are directly addressed to the ombudsman. Fine. The customers are not satisfied from the bank's response, and now they will be approaching to the ombudsman under RBI's integrated ombudsman scheme. Okay, so B will be the correct answer here. Next, under which act is the limitation period for recovery of debt in India governed, and what does it signify or specify? So always remember, the limitation period is specified under the Limitation Act, but what is the year? Fine, year of genesis, you can say, of this particular act, and what is the exact primary focus of the Limitation Act? So always remember, Limitation Act is for 1963 only, not 65 or 73. But out of A and D, which will be the right answer? Because you have to tell me that what does it specifies also. So it sets the prescribed period for legal actions, or it regulates the limitation period for the debt recovery. So definitely it will be the debt recovery option. That is option D will be the right answer, because indeed the Limitation Act of 1963, it regulates the limitation period for your debt recovery. In the NPA management only we study this topic under your PPB subject. Okay, so this was it for today's class. If you want to have the PDF of this session, just scan this QR and you will be redirected to our virtual library, wherein you can directly get the access of all the PDFs which are for which the sessions have been conducted on this particular channel only. Okay, so if you want to have more discussion around various questions, you want to cover the concepts with us, then I would highly recommend you to join the paid classes, and which class suits you best according to your level of preparation. You can have the expert guidance by calling us on this number, that is 0981 981 9247. Here the dedicated team of experts will guide you in a much better way and resolve your queries. Now, when we talk about the PDF, the PYQ's PDF for your PPB examination, you can directly download it from the link of application which is given in the description box. Okay, description box has our official applications link, that is adda 247. There you will be a once you log in this app, you can directly download the PYQ file for your IFS also and PPB also. Okay,